We're just weeks away from the union budget, and this time being an election year, it's just an interim budget, or as the finance minister would have it, it's just a vote on account. But that hasn't stopped many industries and even sectors from pinning their hopes that there could be some announcements made that could really boost their sector as well as the Indian economy as a whole. One subsector being the banking and financial services of our country. Now let's understand what are their expectations from the finance minister and what they hope she can deliver come 1st of February. Let's discuss that in detail, and joining me for that is Dinesh Krishnan. He is a banking editor at Moneycontrol. Thanks so much for speaking with us, Dinesh. Let's go first up and let's look at the banking sector as a whole. It seems like quite healthy growth that they are seeing right now in terms of the numbers. But more importantly, if you have to look at the sector, we are seeing that in terms of bad loans and asset quality, that has improved quite significantly. And also on the other side, the capital adequacy, we are seeing those numbers also quite promising. Could we hear something on those lines? Or give us an overview at this point on how the banking sector is getting into the budget.
First of all, thank you so much for having me on this special budget edition of Moneycontrol, Stacey. As you rightly summarized, and you put it very well, that the banking system looks in a much better shape right now. Going by whichever parameters on asset quality or on capital adequacy compared to what it was, say, in 5 years or 10 years before. So the whole cleanup of Indian banking system has been a work in progress for the last 10 years. So if I can, the starting point of the asset quality cleanup could be probably in 2015, when the Reserve Bank of India initiated what we call the Asset Quality Review, AQR, in 2015, under the former Governor Raghuram Rajan. So till then, the bad loan situation in Indian banks was a very vague, there was no clear estimate on how deep is the problem. But in 2015, the RBI initiated the early identification of stress in the books of Indian banks. To put it simple, they forced the banks to come forth with the actual state of NPAs. So between 2015 to 2018 and 19, there was a deep cleanup of Indian banks. Most of the NPAs that was hidden under the balance sheets of banks were brought out, and a significant chunk of the corporate loans particularly were pushed to either the IBC or were written off in a big scale, which again helped to clean up the balance sheet of banks. So consequently, the NPAs of Indian banks have now come down to, the gross NPAs is now around 3.2% of the total balance sheet, which was, must remember that this was in double digits, say about 10 years ago, post the global financial crisis loose lending phase. So 3.2% gross NPAs and about 0.8% net NPAs. This looks one of the healthiest banking systems in terms of asset quality in the world. Now, let me come to the capital adequacy part. That's obviously the second part. So banks need capital for two purposes mainly. One is to meet the mandatory reserve requirements. They need to keep the CRR, they need to have the SLR, and all the other provisional requirements as stipulated by the regulator. And the second is to fund the credit demand. As and when the demand picks up both from corporates and individuals like you and me, banks need to have funds to lend. So at this point, the capital adequacy of Indian banks, what we call the CRAR, capital to risk adjusted ratio, is close to 15%, which is far above the regulatory minimum of around 11%. So that way also, banking system is in a pretty good shape at this point.
So going by what you're saying, could we see the government then go ahead and announce some kind of capital infusion? They've done that in the past. We've seen, I think, about 3 in the different budgets so far for the Modi regime at least. Could there be hopes that there could be some bit of capital infusion coming in for at least the public sector banks?
Yes. So again, this is related to what I have been explaining to your first question. So, the government has been infusing capital to a significant extent. I would say around 3.5 lakh crores in the last 10 years of Modi government in PSBs. This capital infusion has really helped for banks to shore up their minimum capital ratios.
Right.
Also, banks have been going out in the market and raising funds on their own, particularly the large state-run banks. So banks have already raised money. They don't immediately require capital because much of the capital infusion is already done. For this reason, and also considering the other fact which I told you, the asset quality is pretty stable. There is no pressing need for Indian banks. Particularly, I must say that around 60 to 70% of the Indian banking system is owned by the government still, in the form of PSBs.
Right.
So there is no pressing need for any capital infusion at this point. I have a feeling that we won't hear much in this budget in terms of capital infusion for the reasons I explained.
Right, because it is an interim budget, so you wouldn't want to go populist in that way. But also, let's talk about the other aspect where we're seeing bank privatization. Now, this was something that was taken up in the 21-22 budget where Nirmala Sitharaman spoke about IDBI, but it was left just to statements and we didn't see much happening further after that. There were supposed to be two other PSUs also that were supposed to have this kind of privatization or disinvestment, if you have to look at it. Could we have something on those, on those lines this time around?
Well, as you said, privatization has been an unfulfilled promise of not just the NDA government, even the UPA governments for this last several years. It's not very easy in Indian context. I tell you the reason. Most of the Indian banks are still dominated by very powerful trade unions. And these trade unions are politically backed, and particularly in an election year, no government wants to ruffle the feathers in terms of by forcefully initiating a privatization at this point, because that will have certain political ramifications. Now, the politics is only one part of it. The other part is that we must remember when you say privatization, obviously that concerns with the public sector banks. And each of these public sector banks have very strong holds in their own local markets. And they are related to, local investors, local businessmen, and, so geographically, these banks are very strong in their own areas. We have seen a mega merger in 2019 and 20. When 10 public sector banks were merged into 4, which brought down the number of public sector banks to 12 now. Now we have a dozen public sector banks. So, in a year where we are going to see a parliament election, I really don't expect the government to press ahead with the privatization agenda at this point. But I would say that there can be some mentions. There can be some statements that will probably give us a signal that the government wants to do it at some point. Although I don't expect this to happen in this year, very frankly.
So we can watch out for that if there could be some indicators, hints or clues. Let's shift focus a little narrower towards the MFIs or the microfinance institutes and how they have really been hoping that there could be some kind of, guarantee credit like what was introduced last time around. Could there be any further announcements on those regards, something that could boost the lending for the SME as well as MFI?
Yes, I do expect some measures that could help funding support for smaller lenders, whether you call it MFI, microfinance institutions, or SFBs, small finance banks, or even nodal agencies like NABARD, support through NABARD and SIDBI. That is a continuous process. In every budget, the government keeps a funding channel open for targeting these smaller lenders. Also because these are the lenders where most of the borrowers are smaller companies and small merchants, which is a significant part of the stakeholders for in the overall lending system, who are not necessarily a favorite of the larger lenders, because larger lenders tend to cater for the big corporates, and they also look for individual borrowers. So there is a gap between the individual lenders and the big corporates, which is the mid-sized companies and smaller merchants as well. This is the category that is largely served by MFIs. I'm talking about vegetable vendors, kirana shop owners, those kind of 50,000 to 5 lakh kind of smaller loans. Rupees. So I think that it's a fair expectation that the government could come with some supporting measures in terms of funding support as well as some credit guarantee. Credit guarantee works like banks can lend to their economically weaker sections, for which they will get a guarantee support from the central government.
Right.
So that is a fair expectation which could probably happen. Also because this is going to be an election year and the government wants to keep those constituents happy.
Right. My final question is going to be around fintech and the NBFC space. We're seeing a lot of traction coming in with UPI and those kind of digitization that is taking place at such a the government also pushing for it in all forms. Could we expect to hear something on that, some kind of changes or some kind of announcement when it comes to even AI being that buzzword in the whole banking system? So could we hear anything on those fronts?
Yeah, AI is the latest fancy word in the financial landscape. If you see, the RBI had recently, in December 2023, they had come with a detailed set of framework for digital lenders. So, all these fintechs and digital lenders, AI, all these have major overlaps. We are talking about the same set of universe.
Yes.
Digital lenders are mostly fintechs, right?
Right.
So, RBI has now come with a clear framework. On the part of government, can they do something? I really doubt at this point whether they have, because the set of regulations which the banking regulator has already come with is sufficient enough to get a start for this industry to in their formative years. Also, AI is something which is very, very new to the Indian banking system. We keep talking about it, we keep discussing about it, but on the ground level, banks are just testing it out on how to imbibe this in their daily operations effectively. And a new technology comes with benefits, but it also has its own risks.
Right.
And ours is a country where even the bigger banks are still struggling with how to even, keep their mobile banking operations or net banking operations safe.
Correct.
We are a country where we see thousands of fraudulent transactions on a daily basis. So as far as technology is concerned, is a double-edged sword for the banks, which are essentially in the business of managing the money of public, right? So I would believe that the government may not intervene so much into regulations of, except in when it comes to data privacy or in those issues, that there may be national regulation. But otherwise, as far as banks are concerned, it has more to do with how RBI is approaching it.
Right.
I don't expect much in the budget. Happy to be surprised, but that's my feeling.
Right. So let's keep our fingers crossed and see what comes come 1st of February when Finance Minister goes on to present her 6th budget, in fact the 11th budget for the Modi government.